Shavyfxhub. So let's look at BTC US PT. So we chose to look at 4 hours. I've looked at daily, and I think the structure is well set out. And we're drawing our price action from December 5th. So that's roughly 1 month plus price action from the movement of the price. Here we have a supply roof and a break of a supply roof. There's a break of structure on this structure from a horizontal supply perspective. So you have here as a break and a retest, another retest before break of the demand floor, and we place it on that level, and ultimately you get that sell idea. So the structure is respecting itself. So what we have here is ROS resistance become support and break of structure. We have the break of structure and here followed by a retest to a broken structure. RT, SR. We have subsequent retest candle to that broken demand floor, and price have rallied to create a new high from that point. After that first breakout, followed by retest, we had another trust. Now we have a break of a demand floor leading us to a supply roof. This is a break of structure candle, and we have here a retest candle to a broken structure. RT and ROS. The retest candle and resistance become support and break of structure. So if we break out from this structure, that opens a new wave of buy idea for BTC. From a horizontal perspective, we have the support level here upheld. Price upheld yesterday. I called a buy idea earlier today, and yesterday also we had that buy idea at 102,473. I made mention of that trade position, and that area was impaired firmly. Now, as buyers continue to hold on to buy position, sellers are initiating a sell structure, and we must not overlook. We have here after a break of structure, we have price creating a horizontal supply roof in the form of ROS, multiple ROS structure before the break of structure. And price returns here again to retest as another ROS, and we have another return into this level as another ROS, and also a retest candle to a broken structure. So it's not just only ROS, but that's also an RT. That's ROS, RT, retest to a broken structure, whereby resistance becomes support in broken structure. And when that resistance level is broken, it becomes a support, making it also SR, RT. Resistance becomes support on broken structure, and as well a retest candle to a broken structure. What structure was broken? A supply roof. Break of a supply roof. Price came back to retest. And on the bottom here, we have price create a demand floor. And if price returns to this demand floor, this will be a critical area of buy. So as This would be a buy floor, but I would prefer to buy on a trend. If you want to buy from this structure, it is best that you wait for price at this level. But due to close of a body candle, the market might react at this level. So ignoring that week, so there's a very high probability the next reaction you get will be on this floor. As this has remained, we must factor this week for a potential bullish reaction if price returns to that line. So on technical, we have created a strong. These are all retest candle because previously we have a breakout, so they are all SRRT. We don't want to look too back. So these are all retest candle to a broken structure. A previously broken supply roof all became demand floor. So we have done this before, and it is what it is. So we have a demand structure at this level, an SR level, and in this bearish candle, we have a stoppage where price broke a structure. There's a structure break at this level, and after that break of structure, price has rallied up again, and the structure, after a break from that level, buying sustained level. There's a break of structure at this level where price creates a demand floor, break of a demand floor, return a supply roof. Retest of a supply roof, break of a supply roof, price turns on demand to create a high, which ultimately met a supply roof, which was also a previous break of structure. And when price break that demand floor, it retested it and continued selling to come to the area of liquidity. These are areas of liquidity injection into Bitcoin. And the price has demonstrated that this is a strong area of liquidity after successful weak rejection. Price returned within the zone, returned again, returned again, returned again, returned again. Automatically, it's a descending trendline liquidity zone. It's descending, but at the same time, market want to buy at the break of the previous low. If you notice this low, there are different angles, and each of them is a break of the previous one. But when price bought here, it broke this structure. When price bought here, it broke this structure. When price bought here, it broke this structure completely with the weak body rejection. And we must factor that weak body rejection because market sometimes is very dynamic. So price might want to come down here in a subsequent touch to give us a trigger, thereby breaking the previous low. So if this market wants to buy in search of liquidity, take stop loss, it has to break the structure. For it to break the structure, the market has to come here. This is the body of the candle. This is the weak liquidity grab. Every week is grab of liquidity, liquidity grab, liquidity grab. So, in fact, if I want to be very systematic, I will say that the next grab might be coming to this level. It makes a whole lot of sense to see liquidity grab at this level, representing the structure. I will prefer this after we have a perfect price action from this level. We have a perfect price action from here. 4 hour body of the candle close, creating a strong demand floor. Then we clone the structure. And where do we have the most liquidity grab? Very obvious liquidity grab. These are 4 hour structure initiating and indicating a strong foundation for uptick. So if we want to be very analytical, I want to lead this trade from here and return the structure to this level, hoping that price will dip hand into a stronger liquidity for uptick. This makes a whole lot of sense because now we have a valid structure. The structure 4 hours bamboo candle close have created a descending structure, which is also a liquidity tap area. So where do we have the most extreme liquidity grab? It's in the month of December. It rejected the entire candle. Now we have an affirmed descending trend line. We clone that structure and bring it to this area to indicate that the next liquidity grab will be a break of the most advanced liquidity grab in the structure. And this is the most advanced liquidity grab. If you look back, you're not going to find any liquidity grab of this. So if you need a potential buy where there will be another liquidity grab, it will be in this zone. So this becomes a demand floor. So I seek demand on this floor. So if price comes back here, it will make a whole lot of sense to see it as and I'll be adding more confluence to it. We have a descending trend line breaker from this structure, indicating that it could be more volatile than what we have. It could be more volatile, it could be more volatile. We have a structure at this level. So if we have a bearish drop, we'll look at it and recalibrate. But it really shows that it could be something more, it could be something more disastrous. We have a structure at this area, we have a strong structure at this area. And if we look at that break of structure, it brings us closer to what we are looking for. We are not there yet, but we don't think we need this data. But we'll keep it for reference because this descending trend line breaker structure is also very important, which is also pointing that when the liquidity drop in price, this could be a pathway for bullish confirmation, where we expect price to come and retest a broken descending trend, giving us the opportunity to go long again, in line with the price action, which is bullish. So you see the reaction at this level, market creating important price action, supply roof. So when price return, we have here supply roof, we have here supply roof, break of a supply roof, price return here on demand. And we have here a break of structure, and this is a break of a demand floor, followed by a retest one, retest two of a supply roof, break of a supply roof, price returns here on demand one, and this is price creating a supply roof resistant to upswing before breakout structure. And when price returned, we expected it as a demand floor, but we finally broke the demand structure to continue trading below price. Here we have price breakout structure, and price has returned here to affirm a buy position, return again to affirm another buy position. Ladies and gentlemen, sometimes these things are not manipulation. This is structure of market. You can see the market return again after first test, second test. This is from the breakout structure. From a proctorer's perspective, you will see everything is well programmed and well informed. Now, what do we see that is going to happen again? We have another structure from there. And I also want to draw my perspective from this 4 hours structure hold where I see buyers being upheld actively and they have held their position tight. We have a breakout structure at this level. Let me put this right. This is the demand floor, demand floor, demand floor, demand floor, demand floor, breakout structure, price returns on demand. I'm going to change the color to black. Yeah. Gradually, this is for educational purpose, market structure series. So don't expect it to be clean. It's not to impress you, but it's to tell you what market is doing. Look at the black ascending trend line. You have here price play as a demand floor, price on a demand floor, break of a demand floor, price came here to retest it as a supply roof, break of a supply roof, price returns as a demand floor, and continue upticking. So this is what we have, and we make a zone out of that because you can say multiple weeks on that 4 hours ascending trend line, thereby giving us a retest opportunity. And when price return here on this SR, it has kept buyers going. So we are going to fence it and keep that in mind. You can see why when price returned there, it quickly rejected at 2000, 102,473 had double confluence. Double confluence from this structure, and we have price creating a structure at this level, a breaker structure at this level, a retest and another retest, and price is gone. So this is what we have. And the next thing we want to see is then we look up. This is 4 hours time frame, and we're technically looking out for a stronger um, sell opportunity. We have a very strong sell order at this level, and we have another sell order at this level. And we have a break of structure at this level, followed by first retest, and this is second retest, and the next retest is going to be on the structure. So if we are going by that, let's see, let's clone the structure to see if this structure gives us what we want. Then we can now be sure of what we are saying. Ladies and gentlemen, we got it right. I want to see a break of structure at this level, where price, after creating a demand floor, break of structure retest, break of a supply roof, price came back above the structure, the respected supply roof returned to retest 1, retest 2. So this becomes ROS1, it becomes ROS2. This is first retest, and that this second retest. The third retest is coming in the zone of 110,000. So this becomes an immediate move where I will be seeking sell opportunity in line with the sell structure. When you look at the market here, the market has given you a 9, a sell structure, a sell structure. I want price to return into the zone and give you a sell structure. If that happens, that will be in the zone of 109 into 110. So this is how we analyze the market by interpreting the structure based on what price has done. It's not a formulation. Everything we do here is based on the structure of the market. And if the market structure is not clean, it shows that something is wrong and we will ultimately get into trouble. So we hope that this structure will indicate our knowledge in interpreting the structure of the market. By the time we see that reaction come there, believe it or not, you're going to see your reaction come true. I've given you a clue. I will have a break of structure at this level. I will have a price initiating a 9 here, initiating a 9. This becomes a sell order. Just like we have a buy order on the floor. We have a buy order on the floor. For every time price returns on this floor, is a potential buy opportunity. So whether you're a trader or not, if you understand this concept, then you will know that this is an institutional buy trend line. So what that means, every time price returns here, they initiate a buy. Now the question is, at what length will it grab liquidity before initiating a buy? So that is where the knowledge of price action comes in. So you see that the market has demonstrated what we want to see. We have seen the structure at this level. We see another structure at this level. And we seek another structure up here. So automatically there becomes our sell zone. So if price manages to swing into this area, you will be right by selling. If you sell here, number one, you are fulfilling our trading strategy, sell at the break of the previous high. So if you are selling at the break of the previous high, no matter how dangerous the market is, it will come to your area of entry. Even if it comes close to your stop loss and you decide to extend your stop loss in order not to lose your cash, but I will guarantee you that the market will ultimately return back in correction to that bullish wave and they get back to your point of entry where you may have the opportunity to exit the trade without gain and without loss. That is the advantage of when you want to sell, you sell at the break of the previous high. It gives you an opportunity that even if you are wrong in your analysis, price will return. It will return to your point of entry where you will have the opportunity to lead the trade. Because if you don't do that, if you buy too low, price may never return. It may never return. But for every time price sells at the break of the previous high, it comes back for retest. Because now it becomes a broken supply route, becomes a demand floor. So when it comes back as a retest, you run away. That's an opportunity to get out of a bad situation. So that is how to get out of a bad situation. So what we see here is we want to see price return into the structure. A return into this structure is a 4-hour structure with a very strong price action. And I see that buyers are coming and they are insisting. So this becomes my new buy litmus test. So if you see price break away from the structure, I'm going to change the color to green. So you will watch this green color. If price breaks away from this structure, look at the price action here, price play as a supply roof, and the break of a supply roof price turns on demand, respecting again as on demand, break of the demand structure, price turns here as a retest candle, and as a resistance becomes support, support on break of structure. So if we have this structure broken, it opens a new wave of buy rally where we see ourselves ultimately want to go and fulfill this roof. So if we get out from here, then it will be the prophecy fulfilled where we see price giving us a sell opportunity in this door matrix. So what we want to see if that happens, then you want to see. So if we're estimating that to be on Monday, let us say we're estimating price to come here on Sunday, it will be in the zone of 109. There we invoke our vertical root strategy where we look at it based on timing. And if we're estimating that to happen today Sunday, which is very unlikely because there's no strong fundamental